just looking at where liquidity is. And if we see an old daily low taken, that is a significant pool of liquidity. There's lots of orders below an old low, like I indicated on the daily chart before transitioning to the hourly. But this event where it goes below that low, it's being paired with smart money that wants to buy. Now, right away, some of you are looking at this, oh, this is all hindsight. I'm teaching it through hindsight, but I promise if you go through your charts, the things I'm showing you here, they repeat over and over again, which is a basis for a model. This could be your unique trading model, and it's not really shown anywhere in any of my content. I don't even teach this even in mentorship. What I'm showing you here is fresh, but it's using concepts that I've touched on even in this free YouTube channel and in my mentorship. So I'm blending both of the worlds that are inside my mentorship and outside. I'm bringing them together with something for free right here, so that way you can gain a greater understanding of what the markets are doing and why they're doing it. If this is true, if my assumption and my argument that I pose to everyone that comes to me, if these markets are not 100% manipulated by an algorithm, then the things I'm going to show you here won't hold up. If price runs below an old low, that sell side liquidity has been purged only if we start to move away from it. Now, it might be a sweep on stops and then it continues higher, but if it runs below it and then goes back above a specific level, what level would that be? Well, we want to look at the day that it occurs and it runs the liquidity out. So this day here, I've annotated the daily high. If that high is traded to and through, that is a market structure break. Only on the basis of a liquidity purge. Now, it does not mean it's 100% successful. It just means that from an algorithmic standpoint, if we're looking at logical steps of processes, we look for this. If this occurs, then we look for this. If that occurs, then we look for this. And if that occurs, we look for that. So it's a matter of looking at a recipe for a model that would be unfolding dynamically. So if this day's high, when it takes the liquidity out, is broken on the upside here, I don't need it to close above it. I don't need that, because the narrative is it ran below an old low for liquidity. If it's going to go higher, the algorithm will start its macro, and macro is a short order of processes that begin and go step by step. And it's like a small little algorithm in a sense. And the large algorithm that creates and controls price action, it's just a bunch of smaller little algorithms that tie together. And it's very complex, obviously, but just know that you can reduce it to something as simple as what I'm showing you here. It may not seem simple right now because I'm a little wordy, but I need you to understand there's certain things that are at play here that cause these things, okay, that occur. So the run below the liquidity, if that day's high is broken, we see it here. Then we can start looking for buy side liquidity for the algorithm to revert to. Here's the previous day's high. That's all these little blind segments are. I'm looking at the daily high that is between 12 and 12 midnight each day. So this day's liquidity is taken out, but it's a break in market structure on the basis and narrative that we've taken sell side liquidity out. So now, once it does this, where do we anticipate price going to? Well, you first have to revert back to this high and this low. So we're looking at how much we're going to retrace from this low into this high. It may not ever get back to that high. And then here's the thing. You don't need to have it go there. But you need to know where the midpoint is. And that's what this level is here. So that's basically equilibrium between the high and the low of that obvious range. Now, the algorithm knows this range high, and it knows the low it forms here. The midpoint is equilibrium. So what we're doing is we want to look at 3 days back as far as in terms of time.
Forget spending 8 hours a day trading. I just pick up my trades the night before, set up my auto.
The liquidity above the daily highs as far back as day 3, and the filter is the midpoint or equilibrium of the range that it's traded in prior to the liquidity being purged. Now, I already know some of you, some of your ears are smoking right now. You're thinking, man, this is too much. I need a trend line right now. Somebody tossed me a moving average. ICT's killing me here.